Of course, Greece, one of the politically and economically troubled country in 2015, has one of the best performing bond markets this year, 20%. So how come a country with such political and economic turmoil, we're all every day in the news, with all kind of protests made it there? It's been one of the interesting and challenging year for emerging markets and frontier markets. The report is now out from Exotix partners based in London, but the chief economist, Alan Cameron, is talking to us via Skype now from New York. It's still early morning hours. So Alan, thank you very much for coming through to us on Skype. We appreciate it very early, getting you out of bed to talk to us in Lagos.
It's okay.
Thank you, Alan. We appreciate that. I put this report, this 26, almost 30-page report, put it together for us from an Africa's perspective. What has 2015 been like for the continent, especially sub-Saharan Africa?
Well, I think it's been quite a tough year for most of Africa. We're in this mindset where African economy is growing by from 5 to 7%. This year, we've had to get used to a new kind of Africa where the average growth rate across the continent might be closer to 4, perhaps even less, and in some places it'll be closer to 0. So I think that's been a fairly big kind of psychological adjustment for people who are used to the last 15 years where everything's been going fairly well. And I think looking into 2016, commodities have been a big part of the story for Africa, and I think it's very difficult to find anyone who's predicting, a rebound in oil prices in particular. So I think kind of a key is going to be separating the economies who, don't need that one impulse, commodity prices or, an increase in leverage that, was such a big force over the last 15 years. We're interested in who doesn't need that in the next few years. And I think therefore more differentiation is required because not all economies in Africa will do well.
Are you speaking to optimism there? What's optimistic? What's based on data analytics? Where's the optimistic point for the African continent?
Well, I think as a general rule, probably East Africa is in a better position simply because they're beneficiaries of lower commodity prices and lower oil prices in general. So if you look at, the years from 2002 to 2008, the first commodities bust, countries such as Kenya and Uganda had much less of a benefit from, an improvement in their terms of trade. In other words, an increase in their export prices, whereas places like Angola and Nigeria clearly had that benefit. So for a place like Nigeria, for a place like Angola, I think that, the question is, what's going to be the plan in the next few years? Whereas in a place like Kenya, it's more fair to say, well, if they just continue what they're doing, they're probably going to continue to produce growth rates that are higher than the rest of the continent. And the difference is that those East African economies have been driven to a much greater extent by investment, whereas the oil-driven economies, obviously, by export growth has been the major driver over the last, 10, 15 years.
So let's talk about pessimism. If you look ahead at 2016, where do you see areas for concern in frontier Africa?
Well, I think, again, our point of departure is that we don't expect oil prices to recover very quickly, and we're very much in line with the consensus there. So I think the question after that is, who has already done sufficient amount of adjustment and who still needs to adjust. So if you're looking, specifically within the African continent, places like Zambia and South Africa appear to have adjusted in a conventional way. So the exchange rates have moved. There's been, noise on the fiscal side that, there's going to be tighter fiscal policy going forward and so on. I think if you want to talk about countries that have made a partial adjustment, we could point to Ghana, we can point to Angola. A lot of the countries within the Francophone West African bloc, particularly because they're tied to the euro, have made a partial adjustment. But then, Egypt and Nigeria are among those countries that have not made an adjustment in a conventional way. In Nigeria, the form of that adjustment is tried to be, managing down imports. But the way we see it is that's a very kind of politically charged type of adjustment that might be more difficult to do than a conventional one through the exchange rate.
Speaking to Nigeria in particular, Alan, what are you looking for as an economist?
So I think the outlook for the current account next year, it quite depends. I mean, a big wild card in that calculation is the extent of waste or leakage that you see. And it's very early days to tell, but it looks like Buhari is having a lot of success in tackling that. So it's possible that Nigeria might be able to have a small deficit in the current account, but once again, it will depend a lot on what kind of leakage is cut out. But either way, even in the best case scenario, depending on what assumptions you make, if you cut out all the leakage, I think that the break-even oil price for Nigeria would still be somewhere in around $70 per barrel to $80 per barrel. Therefore, there is still some adjustment required beyond cutting away the leakage, and I think that's where it will be a difficult year for Nigeria, despite the good things that Buhari is doing.
So put the sub-Saharan Africa together for us in a basket and give us a realistic view for 2016. We've moved from optimism to pessimism, so let's find somewhere in the middle of the road what you call reality.
Yeah, well, I think to the extent that a new growth plan can be devised around investment, remembering that there's only three sources of growth for most economies, either consumption, net exports, or investment. And I think what we're seeing in East Africa is that there has been a coherent plan, a credible plan put in place for investment. And you look at countries like Rwanda or Ethiopia in particular, and these places are drawing in a lot of capital from abroad and from the rest of the region. And I think that's powering an investment-driven type of growth. And I think that could be used as a model for the rest of Africa, but it requires a strong degree of state guidance, and it believes the market and investors and foreign portfolio investors and foreign direct investors to believe in the plans that you have. So for the countries that haven't already had these plans in place, I think it's a question of trying to put them in place, and that's how they're going to get by in an era where commodity prices are not what they were.
All right, thank you so much, Alan. You don't look like someone who just got out of bed 8 o'clock in the morning in New York. Thank you for your time. Bright and early, Chief Economist. We appreciate your time. Alan Cameron, Chief Economist of Exotix Partners, a London-based research firm. Let's come back to you after the break, and we've got some time to talk about what we face every day in the 15 million populated city called Lagos.